capital B, subclause 40 contains the definition of process amounting to manufacture, which is proposed to be deleted. And then in the negative list, 66 capital D, subclause F, a process amounting to manufacture or production of goods, excluding alcoholic liquor for human consumption, that is also being proposed to be deleted. So can we say that now there is a service tax on the process amounting to manufacture? No. Both these changes have been incorporated into the mega exemption notification number 25/2012. If that being so, there is no revenue implication either for the revenue or for the clients, then why this change has been proposed when GST is likely to be there in a couple of months? I think the only thing is the government want to ensure that you report all these figures in your returns. Once it is a part of negative list, you are not supposed to include it into your return, but once it is being exempted by way of a notification, then you are certainly supposed to include it in your return and claim exemption by way of writing the exemption notification number. So this is the purpose of this change, of course having no revenue implication for anybody. Then if we move further, then we find there are huge changes in authority of advance ruling. I started my practice in indirect taxes in 2006, and since then I have neither visited income tax office nor income tax tribunal. So my friends who are in the income tax side, I was never getting an opportunity to meet them. Perhaps the government has made changes where I may get an opportunity now to meet with my friends on direct taxes. Because authority of advance ruling of custom, excise and service tax is being merged with authority of advance ruling of direct taxes established under section 245 capital O of Income Tax Act 1961. And we have seen for the last couple of months it is working in the same premises, that is Chanakyapuri. So there are a lot more changes being done because now these authorities are being synchronized. This is one consolidated authority. So they have made changes to align it with the income tax law. The period of disposal is from 90 days to 6 months. Fees being increased from 2,500 to 10,000. No authority need to be invalidated for want of constitution or there is defect in the constitution of the bench or vacancy in the bench. And finally, whatever proceedings are pending at any stage, they have introduced a new section 96H capital A. All those proceedings will be shifted to authority of advance ruling established under Income Tax Act. After that, they are proposed to insert a new section 104 into this Finance Act 1994. If you look at the background of this section, you will find there have been a lot more litigation which are going on. Some of the judgment have already been decided, like in the case of Maharashtra Development Authority or Noida and Greater Noida Authority. The contention of the government was once you are giving a land on lease, that lease may be more than 30 years, maybe 99-year lease, the revenue which is being collected from those receipts are subject to service tax under section 65, 105, ZZZA, that is renting of immovable property, which was introduced on 1st June 2007. So lot more litigation was going on. So on 22nd of September, looking to the litigation and the revenue implication was only on the state industrial corporation, the government issued exemption notification 41/2016, giving relief saying, kindly look, the relief is only for the State Industrial Development Corporation oblique undertaking, who are giving their plots to the industrial unit and the lease was more than 30 years, and what was being excluded, not the recurring charges like ground rent, etc. The exclusion was only with regard to upfront payment, salami, lump sum payment or development charge or any other name what you call it. But still the litigation was on, so now what they have done, they have provided this exemption retrospectively. That is why 104, otherwise they would have done it by way of a notification. Whenever they have to grant a retrospective exemption, they have to go to the Parliament, so this section 104 is being introduced. So with this, lot more litigation like RICO, Rajasthan Industrial Development, Haryana State Industrial Development, Delhi State. But this amendment will not benefit Hooda or DDA, who are allotting plot for residential purpose or for institutional purpose. Very recently, I have argued the matter of DDA with the demand of 955 crore of service tax was there, and we are awaiting the order very eagerly because that matter went quite long and we argued for almost 6 hours. We are waiting for the outcome of that order because the revenue implication is more than 3,000 crores. This exemption is not going to affect them. Again, I am saying the retrospective exemption has been given to the state industrial corporation oblique undertaking who are allotting plot to the industrial unit, and the lease period is 30 years and the exemption is only for upfront payment by the name of salami, premium, sale price or development charges. Rest recurring expenses are subject to service tax. Now we move to another change which is being proposed, that is section 105. To understand this change, we have to understand that the Ministry of Civil Aviation has very recently launched a scheme which is called Regional Connectivity Scheme. For example, there is a flight now from Delhi to Amritsar, but there is no airport in Patiala. So they are starting these, they have selected certain small towns which will be connected by the regional, and they will be called regional airports, regional connectivity scheme airports. So of course, they issued a notification on 30th of August saying you are liable to pay service tax only on 10% granting an abatement. But the government also realized that by providing these services, these airline companies are incurring huge losses. Once they have been incurring huge losses, they find a very novel way to fund it. They said whatever the airlines who are going to the premium routes, they have to contribute something, and they created a fund, Viability Bridge Fund. So out of that fund, the money was given to the airlines who were going to the regional connectivity airport. Now the question comes whether this amount is subject to service tax. Looking to the definition of service 65B 44, any activity for a consideration. So the government thought if that money is there, we are giving them to fund them, they have to pay service tax, that is 14% out of that amount. So that will be a drainage on the resources. So what they have done, they have provided exemption to them. Two changes have been made. One, they have amended the mega exemption notification, giving them exemption from 2nd February onwards, and then for retrospective, they have brought out this section 105. But this exemption shall be available only for 1 year from the start of that airport. For example, Patiala, I am given to understand, has been started in December. So from 2nd February till December 2018, 2017, they will get the benefit of this.